The market's wrong. Like Bitcoin is massively undervalued right now at whatever it is, 56, 7,000 per coin. Um, and again, reiterating what I'm saying, there is just so little Bitcoin out there. You can't double your holdings as a large entity at this point. So it's going to shoot up. The pressure has to be alleviated in other ways. So what I see right now is Bitcoin's like a beach ball, and we're pushing it underwater right now, and people are starting to get bored. Maybe it's intentional, maybe it's paper Bitcoin shorting Bitcoin and pushing the price down, but that is not sustainable simply because there's so much buy demand. Every quarter, Tether is going to be buying Bitcoin. Every couple months, MicroStrategy is buying, Semler is buying, and we're going to see more and more of that. One of the largest pension funds in the world in Korea is allocating to MicroStrategy now. So you can see the tide already turning. But just like in The Big Short, the market takes time to realize what's happening. It's always going to be the people that are paying attention to Bitcoin that see all these factors and are allocating to it. This is why Michael Saylor is going to try to buy as much as he can right now.
Bitcoin is ridiculously undervalued right now. That's the latest message from CEO of January 3rd, Samson Mow. In his most recent interview, Samson revealed his thoughts on why he still believes a $1 million Bitcoin is in play for 2024 or 2025. Samson likens Bitcoin to a beach ball being held underwater, with immense buying pressure building from institutions and ETFs. He points out that there is very little Bitcoin available, and it's becoming nearly impossible for large entities to double their holdings. As a result, he predicts a major price surge on the horizon. Major institutions like MicroStrategy, Semler Scientific, and Tether are continuing to invest heavily in Bitcoin, a trend that Mow believes will only accelerate as more companies recognize the potential of a Bitcoin-focused strategy. While Mow stands by his bold prediction of Bitcoin reaching $1 million by the end of 2025, he admits the market is slow to realize what's happening. However, one thing remains clear: the tide is turning. Make sure to stick around to the end of the video as we dive deeper into Samson Mow's insights and predictions on the future of Bitcoin. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now here's Samson Mow with his current Bitcoin outlook.
If you look at ordinary people, they want to buy Bitcoin when it's at all-time highs. They're not interested when we're down in the 50s, right? And it's the same thing. Like everyone gets Bitcoin at the price they deserve. It's a very interesting thing because MicroStrategy usually pre-announces their contribution to Bitcoin demand. Like we know that they're going to buy $2 billion worth of Bitcoin. And I guess credit also should go to Mara. They also pre-announced their buy. But I think that is a large spike in demand that we should be watching out for. And this is really why I believe the markets are irrational right now. You have a lot of fear permeating the market and in sentiment of investors and traders, I guess, that Bitcoin price is going to go down for a number of reasons. But this is predicated on potential selling or macroeconomic factors. But it seems to be that they put very little weight into these obvious spikes in demand that are pre-announced well in advance. But speculation on potential selling and even a little bit of selling like from Mt. Gox can cause the market to be very jittery. But they just completely disregard this beacon of demand that is broadcasted out there from companies like MicroStrategy. For most Bitcoiners, I don't believe they are very fearful. I mean, opportunities to buy at lower prices is a godsend. And it's like you're happy both ways. You're happy when it goes up because obviously it's up, but you're also happy when it goes down because you're accumulating more Bitcoin and maybe lowering your cost basis for acquisition of Bitcoin. But the Bitcoin is a very interesting asset because it is a bearer asset. You can hold it yourself. The supply schedule is fixed, right? Every 4 years there's a halving, and it's like every 10 minutes there's a block. There's not that much to worry about if you're a hodler, or what we call people that hold Bitcoin. So you can kind of put it into cold storage, turn your phone off or your computer off, and just go travel and read books for a year and come back, and you'll see what happens. Like the price probably will go up. But it differs from things like fiat money, where you have to pay attention. You have to be watching the Federal Reserve. You have to dial into the FOMC meetings and hang on to every word being said. If you're holding equities, you have to pay attention too. So I think it's a very different thing. And as people understand this interesting property of Bitcoin, that you just buy and hold it for long periods of time, more people will start to understand that the short-term price volatility is really a distraction. You're not buying Bitcoin for the gains in the next year. You're buying Bitcoin for the gains in 10, 20 years, which is almost guaranteed. The narratives I hear right now that are kind of just really exasperating are things like, well, rate cuts are coming. And suddenly now people have decided rate cuts are bearish because there could be a recession if there are rate cuts. But, just roll back the clock a couple of years, everyone was complaining about high rates, and there's very low liquidity in the marketplace because no one has money. So you can't have it both ways. Is it bearish or is it bullish? It's only one or the other. I think it has to be bullish because you're seeing more liquidity being injected into the system. Another one was, what was it again? That historically September is a red month. Bitcoin does not perform well. And there are reports in various news outlets and by various technical analysts saying, Bitcoin could drop 40%. But, we already had a big drop. I don't think you can just go back to analyze historical data and say it's going to happen again. We had a big drop. And the interesting thing about that big drop was the massive influx of buying that came when Bitcoin went to the low 50s. This was when the US market opened. So the yen carry trade blew up, Japanese market, Asian markets were tanking. And then the moment that the US market opened, you just see Bitcoin rebounding. And I think that goes to show that there is strong demand, especially from the ETFs, where they're relatively price insensitive. And that also applies to Bitcoin being sort of recession proof because you have large pools of institutional capital that have nothing else to do. So in a recession, I think ordinary people, retail investors probably are going to have a hard time. But we are seeing pension funds with hundreds of billions of dollars invest in Bitcoin. And that doesn't really change in a recession. They still need to meet their obligations and deliver to the pensioners. And it's the same for every other major institutional investor. They're sitting on piles and piles of cash, and they're going to do something with that. And it's likely that they will put it into Bitcoin. At least that's the trend I'm seeing. Last few months, I've been engaging with some politicians in Asia where I was traveling. And it always comes down to, we'll look into it later. But there is no later, I think. The opportune time to get into Bitcoin likely has already passed. So if you look at who's holding a lot of Bitcoin, MicroStrategy has 220,000. The ETFs in the US have about 900,000. And then you have all the other various holders, like Bitfinex has a large chunk. There's the BitMEX Insurance Fund, and Binance has a good chunk too. But there is not a lot of room to increase holdings at this point. So if you ask yourself, can the US ETFs increase from 900,000 to 2 million Bitcoin, like 10% of the supply? That is going to be exponentially harder than what they've accomplished now in terms of accumulation, because there's not a lot of Bitcoin left. If you look at the ETF holdings of different regions, the US with 900,000, Hong Kong, which came after the US, they have, I think, 4,500-ish now. Australia, 100 something. So both of those regions waited until the US went okay and said go for the ETFs, and then they launched theirs. But launching second and third does no service to you because they've already got the lion's share. And I think it's going to be the same for nation state level accumulation because there's just not a lot left. So can MicroStrategy grow their stack from 220 to 440? I don't see it happening because there's just not a lot there. The ETFs can't double their stack either. So once this incredible scarcity of Bitcoin really hits home and everyone starts to grok that, I believe the price is going to start to appreciate very rapidly. Yeah, so I mean, Michael Burry is famously known for shorting the housing market. and he had his thesis, and the market moved against him. I have my thesis that we will see an Omega candle, which is a $100,000 candle on the daily, which means Bitcoin would go tomorrow to 160,000. And I just see all the macroeconomic factors pointing towards that happening. U.S. debt, I think that was the one we missed, but debt
was the one. I'm pretty sure.
U.S. debt is now $3 billion a day. Previously, it was $1 billion increase per day. And interest payments next year are likely going to top $1 trillion on a 36.7 trillion debt at that time. Who knows? But none of this is sustainable. And at the same time, you have strong Bitcoin fundamentals. You have strong corporate acquisition of Bitcoin by MicroStrategy, by Tether, and others. You have the ETFs, which are still accumulating. It's been flat for the last couple of days, but on net, they're always accumulating. And then you have this crushing debt that has to be dealt with. Either you rebase dollars to Satoshis or you default. There's no other way. There's no way to pay that debt. There's no way to grow out of that debt. So it just seems to be, the system seems to keep on rolling when we should see Bitcoin massively going into full bull market FOMO mode right now. The market's wrong. Like, Bitcoin is massively undervalued right now at whatever it is, 56,000-7,000 per coin. And again, reiterating what I'm saying, there is just so little Bitcoin out there. You can't double your holdings as a large entity at this point. So it's going to shoot up. The pressure has to be alleviated in other ways. So what I see right now is Bitcoin's like a beach ball, and we're pushing it underwater right now, and people are starting to get bored. Maybe it's intentional, maybe it's paper Bitcoin shorting Bitcoin and pushing the price down, but that is not sustainable simply because there's so much buy demand. Every quarter, Tether is going to be buying Bitcoin. Every couple months, MicroStrategy is buying, Semler is buying, and we're going to see more and more of that. One of the largest pension funds in the world in Korea is allocating to MicroStrategy now. So you can see the tide already turning. But just like in The Big Short, the market takes time to realize what's happening. It's always going to be the people that are paying attention to Bitcoin that see all these factors and are allocating to it. This is why Michael Saylor is going to try to buy as much as he can right now.
So there's Samson Mow sharing some compelling insights on why he believes Bitcoin is still vastly undervalued and how the tide may soon be turning in its favor. As he highlighted, the buying pressure from institutions is building, and the potential for Bitcoin's future remains enormous. If you found this video valuable and want to stay informed on the latest in finance and cryptocurrency, please consider subscribing to the channel and hitting the like button. It's free, and you can always change your mind later. Stay tuned for more content where we explore the shifting tides of the financial world. And remember, those who are paying attention now might just be the ones who see the greatest rewards. Until next time, keep learning, stay curious, and we'll see you in the next video.